see the paper seller came in off this high print, and you can see exactly what happened when the paper seller came in off the high print. The price got absolutely mauled to the downside. Absolutely mauled to the downside. And then the paper buyer came in, took the price off the lows, took the price off the lows, took the price off the pullback, took the price off the pullback, and now we're now waiting to see what the next paper trader does from those areas. So we're hoping to be able to give a live commentary on these paper buyers and sellers coming in to these areas so they can take advantage of it. In the olden days, it's a kind of an old expression, Martin. It's not something that a lot of people will kind of say these days, simply because it's simply not as true as it was in the olden days. But paper buyers in the olden days was simply a big off-floor commercial. So, for example, if Warren Buffett, who wasn't on the floor of the exchange, for example, wanted to buy, you know, $1 billion worth of Facebook shares, Warren would phone in an order for $1 billion worth of Facebook shares, and that would be a paper buyer for Facebook. So a paper buyer is a big commercial buyer coming in for Facebook at that stage, and the price, obviously, the dealer goes, wait a second, a paper buyer, not a chance, mate, not a chance. So they're wanting $1 billion of shares. The market maker hasn't got $1 billion to sell, so they have to make a market for $1 billion. How do they make a market for $1 billion? They offer a far higher price for that $1 billion, right? They offer a far higher price for that billion, and obviously that means that the market is going to shoot through the previous highs to find some stop liquidity to get that trade on. And that's exactly what we're looking for. If we see a paper buyer coming in, we know that they're going to have to offer, pull away their offers, and they're going to have to get the price higher, because that paper buyer is going to move the needle, isn't it? It's going to move the needle, and that's what we're trying to pay attention to during this. That's the whole point of the dealer book process. Smart money, absolutely, Theo. It's basically the smart money, the insiders, people that know something about something. But as a scalper, it's useful because we know the dealers have to pull offers. It's not that they've pulled offers, it's that they have to pull offers. When we see a paper buyer, they've not transacted yet. So the paper buyer doesn't get filled at those prices necessarily, right? So when we start seeing buyers coming in on this trade here, for example, or buyers coming in on this trade here, they're not necessarily getting filled in those trades. They're wanting filled. So the dealer has to kind of pull the price up through that level there to get them filled. The dealer has to pull the price up there to get them filled. Otherwise, the dealer's taking a massive short position in these areas. Now, remember, it's not necessarily on the S&P futures. It could be on the stock market, right? A lot of these paper buyers are coming in on stocks, which is why I used the Warren example of Facebook. So you're not going to see like a huge futures trade setting up in terms of volume necessarily. So you can start to recognize that there was a paper buyer coming in. So the dealer has to bid that price right up through the roof. The dealer has to bid the price right up through the roof there. You can see a paper seller looks as if they're coming in on these upticks just now. They're flashing into that sell on these upticks. So there's a paper seller asking for offers up here. There's a paper seller trying to flash up some offers. They're probably trying to get a price up through this level up here. And that's where a paper seller might start coming into this. So what does the dealer have to do in that situation? The dealer has to try desperately and get the price down, because that's what they're trying to do. The dealer wants to get the best, highest price. Dealer doesn't want to give them the best, highest price. So the dealer's going to start trying desperately to get the price down as much as they possibly can do. I don't think it's a big trade at this stage. I think I want to go a wee bit higher than this, and I'll be looking for a transition. Remember, you still have to look for a transition, because they haven't done the trade unless you see the transition. They might ask for a trade. They don't have to execute against that trade if they don't like the price, right? So obviously we want to see the transition. That's why we then look to the order flow. We ask, is there a transition? And then we deal if we get a transition off that higher price. And that's how we get the best possible price, knowing that the next price is absolutely going to crash right through. Now, I think there's still a bid in here at the moment, guys. I think there's still a bid here. I don't see that the paper buyers are quite finished offloading the paper yet, so they've held back some of that paper. So I think the S&P is going to go back up and retest that high print at 14s. And then they'll turn it back round again. If they can get the paper short at that stage, they'll turn it back round, and then they'll sell away from that price. Now, I've just taken a quick sell off of 13.5 there. I'm trying to take some business off at 12.5 for 4 ticks. 12.5 for 4 ticks. I've just been filled at 12.5 for 4 ticks profit on that trade, and I'm getting a stop at break even on that paper seller, guys. Stops at break even on the paper seller. Yep. All good? Everybody gets that? Everybody understood that? So this is what happened to the paper buyer. I don't think they got filled on the first attempt at the higher price here. So I wanted it a little bit higher through the 14s. I thought they needed to get a little bit more than that for the 14s. We started to sell against that higher print at 14s. And obviously from that, we've been able to take the price back down to this price level here. And that's where we got to. So that's a nice trade. Well done anybody that joined me on that short trade. And you might be saying, oh, well, yeah, I kind of didn't see that at all. Well, let's take a little look and see what you could have seen had you taken exactly the same trade as what we just took. So there's the sell trade. Everybody sees I did what I said I was going to do. I took the trade that we said we were going to take. We got the buyer getting jammed at the top edge up here at 13 quarters. We started to sell at 13 quarters, 13 halves. And then we got the break to the downside. Did we get the transition? Well, let's go back out a little bit and see whether we got the transition. Did we get the transition, guys? Yes, we did. We got the book transition coming in from that phase there. And you can see that all you had to do then was lean against that phase, make some easy money sell side profits. And you can see we went from 13s down to 7s. 6 points, guys, 6 points. 10-second chart, 10-second chart, 6 points in approximately 1 minute. We just did $300 a contract on that little bit of a dealer sell, on that little bit of a paper sell, guys. Is that pretty good? I think so. Considering you saw it live, chart starting to show up, right? You saw it live starting to show up at those higher prices. You already saw it. So you saw the dealer sellers coming in. You saw the paper sellers coming in. It doesn't mean they're going to do a transaction. So what we're looking for is to get that short on the books on the transition. On the transition. Selling into the transition rips to the downside. So you can see how well these transitions have paid off. The dealer buyer coming in here, the paper buyer coming in, price goes above. The paper buyer coming in here, the price goes above. The paper seller coming in here, the price goes below. Is that not incredible? Well, I think so. That's why I think it's an incredible program that we're working on here. That's why it's taking time, because it's so blooming good that it's ridiculously good. We want to make sure that when it's lining up, it gives you the highest possible probability, because you guys get sold so much shit that it's embarrassing. People would actually be willing to put their name to the crap that they sell. So what we want to do is make sure when you get an opportunity to take something like this, that it's a brilliant program that actually makes money. How novel would that be for an idea, guys? Woo-woo!